thank you so much for that. And it's been a really great time we've had so far. Very interesting discussions we've had so far. So my name is Uday. I am a data scientist at Swiss Re. And obviously this topic of synthetic data, AI, generally in the insurance industry is very close to my heart. And I'm very excited to have quite a diverse range of panelists here who occupy different places in the insurance industry. And I'm very excited to talk about what their views are, not just about synthetic data, but about AI in general and its applications in the insurance industry. I think no secret here, AI has been the buzzword for the past few years, ever since ChatGPT and before that. And as AI's importance has grown, its applications has grown, I think a term that has come up in the last 2-3 years has been that of synthetic data. So according to Gartner in 2021, only 1% of all AI models were using synthetic data. According to Gartner, again, that number is expected to go up by 60% in the next few years. IDC has a similar report for the insurance industry, where they claim that 40% of all the data used in AI models in insurance is going to be about synthetic data. So I think the hypothesis is that on one side, we have AI models that are growing at such a pace that real data cannot keep up with them, right? And we have a need for this other data. At the same side, there's also this concern for privacy, because we want to make sure that our data or our customers' data is not used to train these models and some of the secrets are not disclosed and overall their privacy is maintained. So I think first, as we go around, the first thing I would like to ask is, what is your conception of synthetic data and AI more generally in the insurance industry? And if you can start by just introducing yourself and what your role is and starting with that, and then I have some more interesting questions to follow up.
I'm Pranshu. I lead insurance at Paytm Insurance Broking. So synthetic data is obviously artificially created data that is used to train models. Two ways of training: you get real world samples or you get artificially created samples. It makes it easier to train models, and honestly, synthetic data has been a part and parcel of any model that you train, especially when you don't have access to real world data. It is also used for something called transfer learning. So I have a fraud investigator who knows this is a fraud and this is not a fraud. So you create artificial data sets to train a model so that you don't need to wait for that. So any pre-trained model would use that, and so on.
Hi everyone, this is Vaishali. I'm head of the business InsurTech at Flipkart. My POV on the synthetic data or the AI/ML model is the dependency as a distributor that I have in terms of differently creating the pricing barriers or the pricing discounts, rewarding the good risk and loading the other risk appropriately. That's number one. And number two is that there is an extent to which a real data can be modeled, and there is also price to this particular data. So synthetic makes all these use cases possible for us, and that's where it is. Thank you.
Good afternoon, everyone. My name is Singh. I work with a company called Marsh India, which is again an insurance broking firm, which is also into risk management, and we support any large multinational or Indian corporates for that. For me, synthetic data is a form of curated data, which take help of say AI or any algorithm, computer algorithm, and use this data for various scenario analysis. And the synthetic data has the characteristic of all the characteristic of the real data. One good thing or one advantage we have is this: it has a data privacy factor, right? So we can mask those personal identifiable information and then use it for various scenario analysis.
Good afternoon, everyone. This is Raution, Jaiswal, CEO and co-founder of InsuredMine. Unlike most of the guys, I am very new to this space in India. I just moved back to India after being in US for 18 years, but running the insurance startup for last 6 years in US. So, it's very interesting to learn and understand the contrast of US space with the Indian market. And in terms of synthetic data, as we were just talking near the pool out there, and I present mostly around the broker side of the business. So, the data becomes way more personal, and it's the privacy is a lot more prominent over there rather than at a carrier level where it's at a much more higher scale. So privacy becomes a much bigger issue, and so if we are leveraging a lot of clients' data, it creates a bias and it creates undue advantage for other players who have not created. So that hypothesis of what Uday was talking about is so relevant, and I think that this it is just the tip of the iceberg of this conversation, which is starting to so such a relevant topic right now, which will become a flavor, and more and more conversation will start to tip off from here. So here we go.
Hello everyone, good afternoon. I'm Sunanda. I'm from IBM and I lead the IBM insurance consulting team from India. Okay, so I think by now all of us know what synthetic data is, right? We have heard about 4 or 5 definitions. Let me put it this way, that synthetic data has been in existence for many years, right? If I give you 2 examples, maybe you would be able to relate. Like say musical synthesizers, right? And flight simulations, right? That has been existing from many, many years, and those are nothing but synthetic data. So why are we talking about it now? Because, generative AI has changed the entire paradigm of how we look at synthetic data, right? So if I have to define synthetic data, it would go like, it's artificially annotated data which is generated by the computer, right, through some simulation or through some algorithm. And with the help of the Gen AI models, that has opened up a lot of opportunities. And we will specifically be talking about the fintech market and the insurance space, right? But we'll wait for Uday to ask us the interesting questions before we proceed further.
Thank you so much. So there's a lot to dig about synthetic data. And maybe I would like to start with you, Hari. I think as a broker, Marsh sits at a very interesting point where a lot of use cases are observed. So can you provide some examples of synthetic data and insurance, and what are some of the opportunities and risks that you see?
Yeah, okay. So it will be difficult for me to name certain tools which my organization uses, but in my experience, I have seen there are a couple of areas where synthetic data or AI is being used. One is risk modeling, right? I'll give you an example of, say, a climate risk model or supply chain risk. So these are emerging risks. Very rarely you will find data available with insurance companies or reinsurance companies and all, or as well as a broker like us. So obviously the use of synthetic data is there to create a lot of simulations about different scenarios in terms of what is the impact or severity or a frequency of a particular loss happening because of climate risk. Similarly with the supply chain. Second, I feel is most of the consulting firms, they use a tool like benchmarking, right? So advisor, when I go and meet a client, obviously I have to suggest something, right? Now I use the tool, right, to advise my client, what kind of limit they should buy, what kind of deductible they should have in an insurance policy. Now, behind all these tools, right, obviously you will find a lot of data analysis which are generated either through AI tool or predictive modeling and things like that. The other area which I see is obviously product development in insurance firms, as well as pricing a product, right? Imagine you are developing a product for a SME client or SME segment, right? What kind of buying behavior they have, what kind of losses they are incurring, right? What kind of pricing they should, they are ready to pay, right? All these things, right? It's very important that we should do some scenario analysis using some data points in those sectors. Obviously, insurance company will have some data, but then augment the data, make it bigger, and create different scenarios, and then develop those product and price, which is really acceptable to. And last but not least is claim handling and or claim assessment, I would say, and fraud control, right? This is where I think, with these various scenarios using synthetic data, you can set up a process which can identify the fraud, right? So I think these are few of the points which I feel where there is a huge use of synthetic data.
I definitely resonate with that a lot. At Swiss Re, we are thinking along similar thoughts. How can we safely generate synthetic data? Where can we use it? But a big topic in synthetic data or AI generally is, what are the risks? What are the challenges? We've all seen horror stories about ChatGPT hallucinating, doing this and that. So if I could put you on the spot, what do you think are some of the challenges we can expect with this synthetic data?
Challenges, if I see, one is obviously the reliability. I can sense that when we say that it is synthetic, right? So obviously, it comes in mind that it is artificially created. So how reliable is, how it is connected with the real world scenario is one of the biggest challenge which we see that. Second, I can relate is, again, see, in insurance, we always say that, human element is very important, right? We say that it's a relationship-driven business, right? So if I come to you and if I know you, you will buy the insurance policy. But when we see or take a cue of in synthetic data, this element is missing, right? I have come across a lot of scenarios where we go out of the policy terms condition and insurance companies have settled claim. So we call it a business call, right? Now it is purely out of business relationship, right? Second, non-standard claim settlements, right? So some information you have not provided, but insurer is ready to pay the claim. Now these elements, the nuances of the real world, I feel will miss in the synthetic data. I don't know how these elements can be clubbed there, but even though all the characteristic of the real data gets captured in synthetic data, but yeah, few nuances like this will always have a challenge. Yeah.
So I think it's important to keep in mind that synthetic data is only there to support AI. So the main story here is AI, right? And the analytics space. So I think with that in mind, maybe I would like to ask Pranshu, how does AI and ML help an aggregator, a broker like Paytm, who's a relatively new entrant in this space here? What has the AI journey been like there?
Right. So insurance fundamentally has two sides, right? So you have the demand side, wherein you create a product, you figure out how to market to people and how do you distribute it. And the other side is the risk side, right? How do you figure out what pricing, how do you underwrite people, how do you adjudicate claims, and then get back people into the renewal loop and essentially get a lot of people in the pool. And especially when you want to expand insurance by 2047 to all of India, you need a lot more of things that work at scale, right? So the risk side applications are obviously very far more evolved, starting from dynamic pricing. So I could have different pricing for different risk cohorts of customers through models that are trained on synthetic data and not on real world, but so that there is no discrimination or bias, but it still solves the problem of being able to distribute different form factors of policies, constructing products that otherwise wouldn't have been available at those low costs, using other alternative data sources and ML models that train it. Claim adjudication at scale, again, is a very, very strong application of AI/ML, wherein by reading hospital record, understanding what is there, figuring out what rule engine what to adjudicate, whether to give a claim, not give a claim, how much to deduct, and so on and so forth. All of that can be trained on ML models, which are essentially learning from humans that are now doing the adjudication, eventually allows it to happen at scale. And on the demand side, which is where obviously as a distributor, far more relevant for us, in essentially understanding response propensity to certain products, in tailoring our marketing communication depending on the cohort of the customer. So a young customer and an old customer and someone with a chronic disease might all get health insurance, but the targeting and what is relevant for me as a customer might change. And that is what AI, ML, generative AI more importantly can do at scale. A lot of the renewals, in understanding who's going to churn, who's not going to churn, getting people who are more likely to churn to have, say, a telecall or an even more advanced listing, and others just a push notification might do. And therefore, again, bringing down the cost of essentially operating insurance, thereby bringing down the premium. I think these are the two sides of how AIML could help a distributor like us to essentially reach out to all of India.
Thanks for that. I think it's really cool to hear how even a company that has such a digital pedigree like Paytm is expanding that pedigree into areas of insurance and new initiatives it has. So since I'm a data scientist and a geek, technical details are my favorite thing. So with that, I would like to go to Sunanda, who works at IBM. Sunanda, could you shed some light on, coming back to synthetic data, what are some of the key methods and technologies that we can use to try and generate high quality synthetic data?
Since I mentioned about synthetic data existed long before, right? So let me start off with the methods which used to exist earlier. So data masking and things like that. Like most of us are aware of it. So anonymous data and pseudonymous data. So there were encoders, decoders. Those were, the means to use a different kind of synthetic data, right? It was still very near to the real data, but we use data masking techniques so that we could mask the personal identifiable PIIs and PHIs and all of that, right? But that was not foolproof because these methods use certain tokens which could still be kind of if you wanted to, you could decode and get back to the original data. That was one of the flaws that existed with certain kind of encoders, right? Now, with the current synthetic data generation that we are talking about, using generative AI models, like the models that most of us are aware of, GPT-like models, which are generative pre-trained transformers, right? Or even the GAN models, right? Which I see Uday nodding his head like this because he being a data scientist, he would know these models very well. And these are actually creating that foolproof, data, which will help us secure the data, secure the personal information, and also at the same time remove some of the biases that can be there in the data. Right? So there are different forms of encoder, decoder models, GAN models, variational, auto encoder models. There are instruct, reward kind of models. So all of these are different types of model, but essentially what it will do is, help you build a more secure data, which can be used and exchanged between multiple entities within an ecosystem, right? So the charm of this entire synthetic data generation lies in the fact that it mimics the real data, but it is not the real data. So it still encapsulates, it is encapsulated within some, unidentifiable masking so that it is pretty much secure. And in the days of GDPR and all of the acts that are in place, the regulatory acts, this is extremely important in the place of fintech for payments, for insurance carriers. So definitely that's what it is, right?
I think you made a very good point about it's not real data, it's a proxy. And I think Hari was mentioning about some of the risks we have. So just a follow-up question for you. So do we need to validate these models along different lines? Is it just the accuracy that is important to us when we use synthetic data? Or are there more dimensions we need to look at?
Yeah, of course, we would need validation, right? Because ultimately it is built on the real data, right? And if I can take some examples, say if I talk about health insurance in the context of US markets, right? BMI used to be measured as one of the factors for providing health insurance, and the premiums used to be taken up based on your BMI, right? Now there was a base error into that data, because when we looked at the BMI data, it was primarily a biased data of male, white, so that kind of a population. It was not a diverse population, right? So obviously that kind of a data will give you different kind of premiums when you are looking at the diverse population, right? So that's a bias, that's an inbuilt bias. Now, coming back to your point about how does it help using the Gen AI related data? So the insurers need to be conscious about what kind of real data is actually being input in the model to generate the synthetic data, right? If there are biases within that real data, that might get amplified when we generate the synthetic data, right? So the insurers need to be very much cautious about this. There are ways and means like the models that I was talking about, which will help us to fine tune the models and remove those biases, right? So, and at the end of all of this, once the models are ready, definitely the insurers need to plot the models with the synthetic data as well as compare it with some real data. That's the validation and the verification that will finally help us, to ensure that it is accurate, it's not hallucinating, or it doesn't have biases, right?
I think that was a really good point, and I think BMI is something we all want to keep private, right? So let's continue to do that. I think taking our head out of the technical aspects, I think now looking at broader opportunities that might become available. I think Raution, as a CEO, where you have to wear many hats, I think you're quite well placed to answer this question. So, how do you think synthetic data or AI in general, since I think we're on the topic of AI, how that can contribute to enhancing customer experience, providing personalized products, and just overall improving the insurance process for a client?
But before I answer that, let me just piggyback on what Hari and Sunanda was saying on the nuance and the bias aspect, because I think it's a very interesting aspect. And I have a very relevant example that just happens in the last month. We were working on our AI model and on the deal predictability, and again, just to build some contour around. So in US, as we talk about personal lines and the commercial lines, personal lines are more commoditized. It's a fast moving commodity on home and auto and things like that. So on the deal predictability, or which is new business or renewal, both, it's moving fast. So we are trying to predict what is the win, and can we predict that win? So when we started building the model, fantastic inputs were coming in, and the outcome was fantastic. So again, we did not even think about it. Okay, we are seeing some 80% plus accuracy on those models. We tested it with our current data or even the historic data to see if there is a false positive and things like that. But fantastic outcome. What was the blind spot out of that, the nuance, as we say, is we then tested that data with the loss. There was bias in it, that the bias was on the win side and not on the loss side. And we saw there was a huge spike in the false positive on the loss, which means the model was designed great, but to give you a bias on the win. And, it took us a long time. So, we could have gone, if we would not have thought comprehensive, we would have gone ahead with that model because the model was predicting what we were looking for. And so it's very important that when you are doing things like this, look for those blind spots or think about the things that you're not thinking. And it's very important, and it will expose, as we all being risk managers, is to think about those black swan moment, as we all say. So yeah, that was an interesting scenario that just
Great
happened.
Point. Yeah, thank you.
Now coming back to that customer experience, so as my company, which is a CRM on insurance broker side, which means the agencies which is selling insurance in US, that's a huge community again out there. So for them, this is something very new. As we always say, Fintech is 10 to 15 years ahead of the curve in terms of technology adoption or everything they have done compared to InsurTech. So the guys you're talking about, the common people who are selling insurance, we say our biggest competition is filing cabinets. It's not another technology. So when you are dealing with that kind of an audience, you have to think about, okay, hey, before I take AI to them, I take technology to them. But now you have to leapfrog that and say, okay, how do I package all of this and get them to that point of where that experience? So one of the core of all of that is consolidating that entire experience and communication in one channel, where you are building those sentiment scores, which is coming out of all the communication, email, text, phone calls. You are using NLP to craft all of that into one communication, using generative AI to send those communication and build that entire thing around, okay, hey, what does it take for a customer in any part of the spectrum of being completely non-interested to somebody who is super excited? How do we communicate with each of them with that variability, which is you are trying to customize things at scale? And all that communication through a CRM that you're trying to build, so that that experience is built. Because what is one of the biggest challenge in any market is not technology, it is people. Finding the right resource to help is a challenging aspect. So you would not, and so you are trying to replace that. Where you needed 10 resources to manage that customer support team or customer success team, you are trying to reduce that to, you are dividing that by high value, low volume, and then high volume, low value work. And that's what you are trying to, so that's where that whole experience is pushed into AI side with that. In the previous, somebody said, right, what you cannot replace by technology is that human experience. That interaction cannot be changed. So we are trying to build that, okay, where it cannot be replaced, leave it there. But I think the hypothesis is 80 to 90% can be replaced. So how do we expedite that with this whole AI communication, taking it all in one go and then building around it? It's a journey.
Yeah. Maybe just a follow-up question on that. What aspects of the insurance process are we trying to automate or infuse with AI, which you think pose the biggest risk?
So again, I will answer it from the broker side of the business rather than on the carrier or the insurance company. So on the broker side, as we call it, it's a 7-stage process. Any insurance company, end of the day, is humming with this 7 process: lead creation, lead capture, sales funnel, then closing a business, onboarding that client, renewal, and win back. These are the 7 process, end of the day, every agency is following in some form or shape. Now what you are trying to do is go deeper into each of these verticals and try to build what can be done. So whether it's in lead creation, what we can use in generative AI, how can I find similar to, like in Amazon, right? You buy, or a McDonald's, you buy burger, they are selling you French fries. So what is that basket thinking that you are able to generate? You find like in Marsh, if you guys are selling, you are saying, okay, if you sold this to this, let's say, an aeroplane industry, you are selling, hey, what next can you buy to that? Okay. So we are trying to build that. Okay, which is your next customer? How can I feed you that? Same thing as we talked about in my previous piece was in the deal funnel. How are you able to use all the communication aspect and then build that, use that generative AI, predictive analytics, customer sentiments, NLP, all of that to build that experience around it. And then same thing with the renewals. So each of these segments, whether it's deal creation, whether it's you're closing a deal, whether it's during servicing or renewal, all these aspects are leveraging AI in some form or shape. It's at a variable degrees right now, but I think the journey is very clear where it is heading.
Hello. Yeah. Since Raution spoke about it from the broker side, I thought from the insurer's standpoint, what we experience with our clients, I just wanted to share that. So one of the areas which is really taking a lot of help of Gen AI and also on synthetic data is the claims processing. Right? That's a huge potential where, earlier lot of time used to be taken to process the data because it consists of processing huge amount of data, and that gets done very easily with GenAI. So definitely that's one of the areas where GenAI is being used by like almost all clients.
Definitely can see the value there. So I think now I would like to kind of ask a question to you, Vaishali. I think working for Flipkart, an e-commerce player, again, a very interesting perspective on insurance, interesting perspectives on fraud and risk assessment. So I think what I would want to hear from your point of view is, and not specific to Flipkart, this can be in industry perspective. What ways can synthetic data improve risk assessment and also help with fraud assessment?
It's a very interesting question, Uday. And I think the entire of synthetic data AI/ML model, this is the core of all these models. That how do you rightfully assess the risk? How do you price it? What do you do with the claims processing? And are you on an ongoing basis able to identify the fraudulent claims and are able to flag it out and maybe put it in a different line of process the way you look at the regular claims versus the ones that are flagged? So let me take a step back and first of all, to the audience, I'm not sure if at all everybody understands in a very simple language that what does synthetic data does in an underwriting process. Synthetic data practically breaks down or adds much more details, right? And it makes the entire model much more accurate in terms of risk prediction. And this is majorly done of a business and scale, which means that underwriting is more efficient and it's a win-win of a situation for the seller of insurance and also for the buyer of insurance, and to a certain extent even to the distributor, because now they are able to rightfully price it and propose that proposition to the customer. Having said that, in an industry like ours, which is like multi-century old, right? Why are we at this junctures, so much intensely discussing about the synthetic data and specifically in the underwriting context? Many of us from the industry are aware that in the last few years, we've seen a lot of trends on the claims, which are very unprecedented. The way COVID happened and it impacted the industry, the way there is a surge of cyber, I would say, adoption also on multifacets, and also the incidents that are rising, right? The way the natural calamities, or as we call in India, act of gods, incidents are happening in terms of frequency and also the kind of impact they are generating. These are the external factors. Now on the behavioral pattern, right? The kind of conversion we've had in terms of behaviors, dependency on the internet. In a very simpler language, I would say 20 years back, we were leading a very offline life. Now we are highly dependent upon technology and we are kind of leading a hybrid lifestyle, right? Wherein a good part of our everyday routine work and our decision making happens on the internet and the digital devices. So when all these things are happening, the underwriter and the insurance companies, they also are now mandated to think that somewhere they need to move beyond their actuarial real data models, and they need to kind of enrich these data models with many more layers of information which can give them a wider cohort for the decision making, and maybe price it in a much more crisper manner. So that is what synthetic data in the underwriting is doing, and I'll give you some examples. In India, we know that for a motor product, a vehicle insurance, right, there are two sets of data that are primarily required. One is your make, model, variant, and second is whether you've had a claim in the past or not. Basis these two data points, for anybody who had these data points common would get a predictable premium, right? That this is the XYZ premium that you'll get. Now, as an underwriter or as a distributor, I would want to create some differentiation because I know there are good customers in this cohort and there are not that much, I would say, preferred and non-preferred risk, right? How do I identify that? Can I pull in some additional information? For example, what does my fuel utilization in a month say about my driving risk or vehicle risk? If at all I'm having a higher recharge or a higher utilization of FASTag, does it imply something on my risk rating? and so on and so forth. And, it's all these data points, they need to kind of come together, and they're being, considered by the underwriters, and a differentiated, crisper, I would say, discounts or loadings are created, which are much more fair, and it makes sense to the generation now, which is buying all these things online. So that's on the underwriting side. And this is on the price table or the pricing aspect of it. There also comes a part of the underwriting, which means that how flexible are you in onboarding the customers, right? So if at all I have the intelligence to identify that this particular cohort of customer is a good risk for me or for the insurance company, can I dilute my 30-pager proposal form into limited questions, and can I do away with the medical underwriting? Partially, yes. Theoretically, yes. All of us are working in that direction. So all those things are possible with the synthetic data, AI, ML models into the underwriting space, and it will have a ripple effect. I somehow see this kind of, coming together to the something that our IRDA chairman has a vision by 2047, insurance for all. If at all we are able to make the customer onboarding easier for the normal public, which considers insurance as a very complicated buying decision, if at all we are able to give them the right pricing for the products that they're buying, why would the more and more people not get onboarded and the insurance will not become more prevalent? So that's part one. I think I've taken a lot of time. Should I go to the fraudulent? So on the fraud aspect also, I think we need to also understand that who's doing this fraud. To a layman, when we say insurance fraud, what comes to the mind is the customer-initiated fraud. But that's not the reality of the insurance fraud. There are so many stakeholders wherein the frauds can happen. Frauds can happen by people who are selling you the policy, right? The agents, the brokers. Fraud can happen to the people who are party to the claims process, be it garage owners, be it doctors, hospitals, or the TPAs for that matter, right? So all these people become your use case or the data centers from which we need to kind of draw the intelligence from. Second thing is, when does the fraud happen? Fraud can happen during any time of the transaction of the insurance life cycle. It could be at the buying stage, it could be at the service stage, it could be at the claim stage. Now, AI ML model, they employ a lot of analytical intelligence such that they're able to highlight certain trends faster than what we would have done without them. This on an ongoing process, on an ongoing basis, kind of, optimizes the insurance company, the distributors. We are able to optimize our risk such that it doesn't go, it doesn't turn bad. That's number one. Number two, it gives us a lot of intelligence also. For example, as a distributor, if at all I'm an online distributor and I want to make my customer journey very simpler, at certain point of time, I will dilute certain guardrails that I should have, in customer onboarding, which at a later life cycle of my relationship with the carrier will bite me in terms of adverse claims ratios. So this intelligence come back to the distributor, and I'm able to bring guardrails, and I'm able to kind of curate the good risk for the carrier back. So these are a few of the use cases that I could identify.
Thank you for that. And I think with just a few minutes left, I would like to ask maybe a philosophical question here, because the title is Insurance by 2047. As a data scientist, sometimes I think my role is very important, but maybe you can humble me. In India, how important or not important is AI to reach this goal of insurance for all by 2047? If anyone has a reaction to that.
So it's a mixed answer, right? So the priority right now is to build products that make sense to the customer, to contextualize it, to vernacularize it, to simplify it, bring down the price, bring down the operating expenses. So AI is a large field, ML is a subset, and then there are many other subsets, are inputs into that larger problem, right? So AI ML is not the end state, right? It's an input, it's a tool that you use to get to solve the problem. The problem, as I said, is simplifying products, simplifying underwriting, figuring out frauds, making claims processes seamless, making it like a second that it takes for you to say yes or no to a claim. So that's how I see it. AI/ML is a tool and not the financial.
So I see synthetic data, playing a great role. Obviously, I think they touched upon product innovation. Now, this is one of the cost-effective method of innovation, right? I don't need to go outside, collect data, do research, right? You know, the cost and the time is huge. Sitting at a system, I can create a lot of models which can throw me so many product innovations, right? And obviously, accordingly, I'll price the product and go to the market, reach out to the respective segment to fill the requirement of insurance.
So again, I'm still into that stage of where I'm enjoying that contrast of US India every day. So again, what is really exciting me about the India story per se, I think again what it has done, as the previous speaker was also talking about, the keynote guy, about the UPI thing and everything that has happened. I am curious to see how India would. So India is certainly behind in the insurance. Like, look at who is sitting here: IBM, Marsh, Swiss. These are all US European company. Where is that Indian? These guys, they are also taking the product from you guys. So that is the first thing I want to see, whether it's a reinsurance company or whether it's a product company that is coming out of India. So that would be one thing that I would be very curious to see how it comes out. And it does not need to follow a traditional path of just how it has matured, how it can leapfrog to just get ahead of the game. And that would be something, and based on AI, how it can disrupt that whole thing.
Am I audible? Yeah. So, like Raution talked about, we are far behind from India perspective, right? Compared to the rest of the world. Our insurance, maybe it's about 3 to 4%, maybe, right? Overall in India. But the question was not related to insurance, right? It was more related to AI ML, right? From the technology standpoint, and I completely agree with the person who was talking just before us, the keynote speaker. He talked about the innovation part, right? We are a extremely innovative bunch. If we have to say that, India really, if you just look at all the deep fake related stuff that has already encroached our lives, right? That's on the negative side of things on certain areas, but that's the technology, right? The technology is already there and is being utilized in many ways. It's just for the business to utilize that technology and come up with that same, how do we leapfrog and get to the area by 2047, where do we go to improve that penetration of insurance from 4% to maybe 40%. We never know, right?
Like you said, we are an innovative bunch, but we are working for others most of the time. And that's what the thing I'm talking about is that India story is how can we make it for India and and that's something, anything that comes out of India for India is, again, I'm kind of hyperlooping this, but that's one of the essence. I said this to Hari earlier that hey, I want to see young minds, bright minds like you guys being into as the regulators, because then you can push things way forward than it is today.
No, for sure. So great insights, and I think we ended on a really wonderful note. Thank you all for your comments. Thank you all for listening, and I think we're up for time. Thank you guys again.